From the floor of the CME Group, this is Danny Riley on today's Cash Close. You know what I'm going to call this video? I'm going to call it the S&P's got to go down before it goes back up. Don't you guys, haven't you learned that yet? The high of the day in the S&P came in at 1976 even, mid-afternoon. We did have an early high after the big sell-off. The low came in at 1961.30 mid-morning or early morning. And last, we're 1973.20. We're up 1.8 handles. Total volume, we've got 1.3 million minis traded, and we've got 1.9 thousand big S&Ps traded in the pit. MOC, the MIM was messing around. It was like 50 to 70 million to buy. The actuals came out MOC by 250 million. Tomorrow, we've got the first day of the FOMC two-day meeting. We've got the Redbook. We've got the Case-Shiller HPI. It used to be S&P Case-Shiller. What happened to that? Why are they moving all this stuff around? Consumer confidence and a 5-year note auction. Now look, Mutual Fund Monday, and I wrote about this in my morning report. If you guys aren't getting my morning report, you should sign up for it. And if you're not getting it, just leave a message on the YouTube channel, and I'll give you the sign up to it. But Mutual Fund Monday has been up 9 of the last 12, but it's actually been down 3 of the last 5. So maybe we're going to break that little streak here today. Now, the other part is what I want to talk about is the pit bulls rule. Now, this is really, really important. And not only that, I wrote about it in today's early report this morning, that the S&P tends to make a high in the 3rd week of July and stays weak until the 3rd week of August. So in other words, we could be coming into a little bit of a turbulent time here with the S&P. I know that this sounds funny, and I know what happens every time the S&P sells off. All the option boys roll over, all the big hedge funds start selling, and all of a sudden those big hedges that they're putting on, the S&P starts reversing. And then I really believe that the mutual funds and the big investment firms use the short sellers in the S&P to create havoc on the upside. And that's what we saw. After we sold off this morning, it was like an accordion of sell stops, an accordion of sell programs, and then we made that low down toward 1960, and then the S&P went straight up. So you know what? I'm under the impression that this is the same old that we've been seeing all the time. You get 2 down days. One was minuscule down. The other one was down 9 days. And then everybody comes in negative. We get a sell-off this morning, and then bam, the futures go right back up. It's my impression, the way the prices are acting this week, provided we can get past this 2-day Fed meeting, I think we're going to new highs. Anyways, I'm going to leave it like that. You guys, sorry I haven't been around the last couple days. Been a little slow. I'll see you guys tomorrow on the opening print.